Okay, Monday, the 3rd of June, 2024. This is the week ahead, brought to you by Financial Juice, a fantastic news squawk service, and Earn to Trade, the best funded trader platform out there. Big week ahead on the jobs front. Let's get into it. Okay, so really quite a lot going on in oil world and coming up in jobs data for equities this week for the stock market. I've really just looked in this week's report on the VWAP report. Go and check it out at OPEC. The takeaways from the meeting and what we're looking at coming in October, where they're going to start rolling off some of the cuts they have. Going through a couple of trades that came through last week, and then also we're going to be looking at the S&P as well in this week's report. So do check it out. It's free to check out. Moving on to the docket for this week. Well, we've had OPEC Plus yesterday. For me, it spells a lot of downside for oil. Potentially, we could have a pretty crazy rally to then fade, but I don't really see that being the case. I see that more actually being the case on equities where we bid up into NFP. But we'll talk about that in a second. So this stock, nothing really happening today. It is a bank holiday here in Ireland today, so I'm going to be quick about Jolt's job openings tomorrow, ADP on Wednesday, and crude oil as per usual. Super Bowl for oil traders. Thursday is going to be the initial jobless claims. Got to keep an eye on this one. Came out pretty benign on the last reading, but the reading we had 2 weeks ago did mark the top of this equity sell-off, and it did cause a lot of the selling to come in because essentially it kind of came in a bit of a beat, and that really kind of takes away the idea that the Fed are going to be cutting, right? It came out as a miss, right? And anyway, then Friday, NFP, of course, street expectations from investing.com is 185,000. There's usually a spread here, so we'll be talking about that live more as we get closer to Friday. Really to talk about the OPEC meeting, I have really broken this down in the VWAP report, really into, the 10 key takeaways essentially. But the one takeaway is that while they're maintaining the cuts through to the end of this year, they are going to start rolling back in the last quarter. So they're going to be adding supply back on to the tune of about 750,000 barrels over the final quarter. So that means there's a lot of supply back into the market from October. All right. Now, the October oil contract is currently trading, and you can trade 10 years forward on oil, right? So people are trading that contract, and it expires on the 18th or 19th of July this year. All right. So you need to be aware of that and how it's going to get priced in pretty fast, as all information is in the futures. So the market's pretty benign on oil. We'll have a look at it here in a minute, but ultimately they're coming off the cuts. It's just going to be in the final quarter of this year, and there's a little bit of shifting around, but lots more detail in the VWAP report, and I'll post a link to this article if you have your Bloom. One thing, I love my Apollo Academy research from Torsten Slock. I really enjoyed this very short one here, looking at how the algos are monitoring Fed hawkishness versus dovishness. So the algos are kind of analyzing the Feds and then taking out, well, are they turning more hawkish or dovish, and are they leaning more towards a cut? So a hike obviously being more hawkish, right? And you're seeing here, this is actually not the right one. So let me go down here, quantifying Fed sentiment here. So you're seeing here that the algos are actually seeing that the Fed is moving a lot, over the last couple of meetings, they're actually moving more to the hawkish side rather than to the dovish side. Okay, so we've been uber hawkish, back to being a bit more dovish, but that sort of neutral area. And now we're starting to reaccelerate here a little bit. So I just thought that was kind of interesting. And, it's food for those of us who think that the next Fed move is going to be a hike rather than. Anyway, go and check it out. It's a super short article. Probably definitely not tradable information, but I just enjoyed these two articles from the FT.com here, looking at demographics and birth rates, right? And so we have an article here looking at births across Europe. This is a very big article, but really, really, really interesting. And then also looking at global demographics and fertility rates here. And so, look, it's interesting stuff. Go and have a read. Not tradable information, but what is tradable information and what is highly volatile are hurricane for oil traders. So NOAA, which is what is NOAA? The National Weather Service for Center. They are actually looking at one of the busiest hurricane seasons on record coming up, and so we do trade this as storms move into the Gulf of Mexico and kind of move towards Galveston and Texas, and they sweep across this whole field of rigs. It can be extremely tradable information if you have experience doing it, and if you kind of know the normal patterns of, well, the market tends to rally on the first confirmation that the storm is coming in, and then really as the storm is to hit land, that bid fades off of the oil market. So just do be aware of that. And, if as a storm is actually hitting the rig centers, don't expect oil to actually then reaccelerate to the upside. It's already been priced in. And if anything, you probably want to be fed as the storms are coming oil rigs or into an oil patch in the Gulf of Mexico. And indeed, when they hit land in the refining facilities, the storms tend to dissipate at a very fast rate once they hit land. So, I thought that would be interesting. Go and check that out. Let's kind of do this and have a look at oil. So on the VWAP report, we've been looking at the quarterly VWAP here on oil. We've also been looking at the yearly, but I just wanted to show you that we're looking at this quarterly, and my concept is that we need to trade down here as a reasonable area. And so last week, quite early on, Monday, Tuesday, and then Wednesday for selling, we had this really strong start to the week essentially. And so we were monitoring the breakout above this QPVH 79.59s, right? A different view here, and just show you when you'll see what we were talking, half deviation on the year positive, and what a lovely place and down we have gone indeed back Q area, right? And ultimately, I think the destination down is the Q, and that is going to be 73.26s. Now, I know that's a country mile away from where we are right now. It's about $4. But we can sort of higher if we then go into the sort of VWAP and look at the 30-minute bars here. You can see that we're quite balanced below the weekly par value area here. So I think if we do try and have a rally back up here, I think it's just ultimately going to get shocked down if it doesn't have a good fundamental cap much higher. We saw a really nice secondary opportunity to get in actually on the shorts here on oil. So we were shorting up here. I'll just overlay a bit of that here for people. Just overlay. I actually get the overlay going on right now, but this was the yearly plus a half deviation short down we went, and this was then the yearly and the quarterly levels, this area. So when we pulled back in there last Friday, it just got sold down hard. So really, really technical, but very nice stuff happening on oil last week, and I expect it to continue this week. So we'll be selling maybe bids coming up into the Q -1, so currently 78.32. So just do keep an eye out for that one today on oil. I think. Yeah, well, actually, let's talk about the NASDAQ, because that, while equities were coming off pretty hard last week, again, looking at a Q VWAP here, right, you can just see there contact with the QPVAH and reaccelerates back up. And I do not see this thing sitting down. In fact, I see this thing moving to a new all-time high this week. All right, so I wouldn't go selling equities, well, certainly NASDAQ here at all. So do keep an eye out for that one. And then the S&P 500, let's have a look here on the SPOOs. My data is a little bit delayed at the moment. But you can see here, again, through the quarterly view, right, we're seeing that while we broke out here around the 2nd of May, we had a really nice breakout, new all-time highs to what was just this little high here from the the 14th of April. It's back down into that 14s and then just rallied really strong. Nonetheless, finishing the week lower and closing out at around 53s there last Friday. So, what do I see happening? Well, given the week that is in it, I see that we could essentially maintain the buying that's come in here, not do too much. And if we do rally, I think it's going to wait for NFP to come in. And I think if NFP comes in quite strong, the market is actually going to fall back down. And if the NFP comes out quite weak, that's going to be, the Fed are going to be leaning more dovish, and the market should reaccelerate to the upside. Kind of thinking, well, hold on, why would the market sell down if it comes in as strong? It shouldn't, right? The market should price in a strong jobs market and let's go, new all-time highs. A couple of times in the VWAP report over the last couple of reports, and indeed live in the Dublin Capital Room, it's just like there is no such thing as bad news. Given the reaction that we saw to that initial jobless figure 2 weeks ago, and go and check out the VWAP report on that, you'll see the charts pinpointing it down to the data drop at the time. The market was quite shaken out on that, right? It's here, right? The market did get shaken out quite a lot on that. Okay, so maybe the same thing could happen again if we get that strong NFP, right? It says that, well, maybe because of this data don't need to cut. And, maybe they're right. Maybe all those people who say there's going to be no cut in 2024 are right. And essentially, but I think this pullback was essentially pricing out a September. Okay, so we're kind of, just niggling always this year. Kind of started off at there should be 8s, and now it's like back down to like they're thinking there's going to be 2, maybe 3. I think we're gonna be all eyes on the Fed. The market's gonna have a huge amount of pressure on it when we come into the September meeting, I think. All right, so that's the S&P 500. And we're just going to keep it sweet, and then we're going to really be doing a lot more coverage on this live when we come to Friday. All right, boys, and have a great one. Keep it tight out there, and for the trade. All right.